Traders, consolidating coming to you from theclosingprint.com, August 16th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which took a breather last week, while the NYSE and the industrials both moved higher, more than 1%, in addition to what we saw with the Nikkei, up 4% on the week, and the Hang Seng bouncing more than 2%. The leading stocks that we follow are mixed. Facebook, Amazon, Netflix, and Microsoft were off a little bit. However, Microsoft is set up for this week. Roku was off more than 6%. The remaining stocks look good and set up for this week as well, especially Nvidia, Intel, and Tesla. Rather than going through each of the indicators separately, we'll do that with the video. Just know at the bottom down here we see 11 bullish indicators, 8 neutral indicators, and 1 bearish indicator to start the week. We're short-term neutral to bullish, and we remain intermediate-term bullish, long-term bullish for the equity market. As yields continue to move higher and bonds lower, there's really no place to put your money except in equities. We'll look at some IBD 50 names that show proper setups above the 9 and 21 day moving average, with RSI above 50 and MACD either turning or crossing last week. We'll also look at some MarketSmith Growth 250 in white, the top volume percent gainers in green, and the stocks from the MarketSmith Blue Dot Scan in cyan. The Dow Industrials, all of these stocks listed are also set up, looking for follow-through. Bukowski showing 505 green with a CPI signal green since June the 29th at 97.9%. Bullish with 5 bearish setups, 5 bullish setups, and 380 patterns waiting for breakout. Bottom line, we're bullish to neutral. We're still in day trade short-term swing mode. VIX continues to drop. It remains the key. And we have support and resistance as indicated. Here is the SPY Renko chart, which eliminates the noise, only produces white or red bricks to indicate bullish or bearish scenarios respectively. Presently, we continue to build white bricks. The trend is bullish. Referring to a standard candlestick chart, as long as we stay above the 9 and 21 day moving average, we are bullish. RSI is above 50, MACD is above its signal line, and volume increased, beating out Thursday's red volume to finish higher on Friday. We also have major volume by price support just below, with a 1618 target above the February highs in our sights. As we see it, there are 3 scenarios that appear present. We could flag sideways as the 9 EMA squeezes price up against the February highs. We could pull back to the 9 or 21 day, or we could break out this week. So we'll monitor for each of those 3 scenarios and update you accordingly during the live session and in the alerts channel. The Nasdaq 100 also fared well. This is the weekly time frame. We can see that we're up almost 67%. As of the previous week's highs, we are putting in a long-legged doji for the weekly time frame, and we'll watch for price action to either follow through, flag, or pull back in the short term, with this chart presently neutral. IWM small caps also outperformed last week. RSI remains in an uptrend. We did pull back a little bit from the highs of the week, but we're up over 68% from the March lows. We did see volume picking up as well. MACD is above its signal line. This is telling you that the bulls are definitely in control. So we'll look for a follow-through, a flag, or a pullback this week, as we're currently neutral in this doji pattern on the weekly time frame. The S&P 1500 also remains on a buy signal, green line above the red line. No change in color at present like we saw back in February. Histogram is tapering off. That could just be a sign of consolidation as we watch for green and blue elder sticks to continue as price action rides above the 9 and 21-day moving averages. The 9 is not shown. The 21-day is in a bullish trend, and we have yet to see any red elder sticks, the appearance of which would indicate caution or selling if there's more than 2 red elder sticks this week. With that in mind, we want to see breadth improving. With those 1,500 stocks, we can break them down into the S&P 500 in the upper panel, mid caps in the middle panel, and small cap 600 in the lower panel. All three are moving up and away from the 200-day moving average. Peaked a little bit last week, but we're still making higher highs and higher lows. Breadth is improving, and the lifeblood of the current bullish trend. With that in mind, we want to add more stocks. This is the NYSE, New York Stock Exchange Advanced Decline, 2,900 stocks, producing higher highs and higher lows. I've colored the area below green. I would only change it to red if the trend changes and NYSE dips down into the red zone. That would be a sell signal. Currently, we are on a buy signal, with the caveat that the number of stocks making new highs versus those making new lows, simple calculation, did taper off a little bit last week. We have our moving average turning down, so we want to keep an eye on that, as well as the New York Stock Exchange Advanced Decline in the previous chart. We want to see continuation of the higher highs and higher lows, and for the New York Stock Exchange 2,900 stocks to continue building blue and red elder sticks. The appearance of red elder sticks would be a caution on the first, a potential sell on the second, and if we start to see multiple candles, that would indicate that there is something going on unforeseen at the moment that would issue a sell signal. We'll update that in the live stream and also on the alerts channel and the daily blogs, as the markets will not reverse on one trading day. While breadth is improving, we also see that the advanced decline percent of the S&P 500 top panel, mid caps, small caps, and Nasdaq in the lower panel have pulled back to refresh themselves. I don't want to be concerned if we drop below zero and start trending rapidly lower. For now, it's just the markets consolidating. We're looking for a bounce and a change in the opposite direction to move higher. As long as we're not above 30, we're looking good between 0 and plus 30%. So looking at this chart as a refresher, looking for stocks to gain some momentum, unless we note otherwise during the sessions on Monday and Tuesday. As NAMO and NYMO, the McClellan oscillator for the Nasdaq and the New York Stock Exchange respectively, is showing, we're starting to see a little plateau. We've seen these in the past. Didn't mean that the markets had to pull back just because we had a little plateau. It's just participation. We want to see breadth improving. This is the 2,900 stocks on the New York Stock Exchange on the composite, and the New York Stock Exchange 2,900 stocks reflected in NYMO, producing green and blue elder sticks, as we previously mentioned, with the summation index continues to push higher. So for now, we're neutral to slightly bullish on the New York Stock Exchange as well, McClellan oscillator and breadth. Finally, and the last indicator that we'll cover today, this is the VIX 60-minute time frame. We are neutral to slightly bullish as long as this is green. We're looking for higher highs and higher lows on the S&P 500 in the upper panel, as the VIX daily continues along its bearish path. Back below 20 this week would be nice. Always mindful that we could see a retracement back or a mean reversion back to the 50-day at any moment, depending on the news. So keep your ears peeled and watch the alerts channel this week. VIX, for the most part, is bullish going into the week. Taking a look at bonds for the moment, there's really no place to put your money as yields continue to move higher. Bond prices are moving lower. When this red line is below the 65 period moving average, the blue line, and dropping, that's telling you to favor equities over bonds, no matter what duration. This is the 1 3-year Treasury bond ETF. at the 50-day moving average, the lower part of its range, as well as the IEF 7-10-year Treasury bond ETF losing the 50-day and moving lower. We're nearing oversold, but not quite there. And the 20-year TLT, which lost the 50-day, looks bearish. As we pointed out during the week, look for follow-through in bonds as yields move higher, with many a bond trader checking the 10-year yield, which is up nearly 200 basis points in the last few weeks. That's bullish for equities, with a move from 5.3 up to 7.1 in the last 3 weeks. Currencies and forex pairs like the British pound US dollar saw consolidation, while the US dollar Japanese yen pair saw higher highs and higher lows. That's bullish for equities. While the dollar consolidates at its August lows, building a base most likely. RSI is oversold, so we're looking for the US dollar to start moving higher. That'll have an impact on commodities. So if you're trading precious metals like gold, be mindful of the US dollar basing. If the dollar starts to rally this week, look for gold to come back to the 50-day moving average in the short term, as RSI clearly depicts some follow-through to the downside as possible. All the while, copper consolidates over the last 4 weeks, moving sideways to slightly lower at 52-week highs. This is a leading economic indicator, especially for the construction-related names, builders, construction products names, home improvement names, and the economy in general. As we can see back in 2008, 4 months, 5 months before the actual 2009 reversal start to the current secular bull market, copper led 3 weeks, 4 weeks. Copper led and started moving higher. We also saw moves after 2016, the election, and currently with a situation where we have higher highs, currently with a situation where we have higher lows, looking for a higher high going into the November elections. MACD is above its signal line, and stochastics, as we pointed out several months ago, was moving higher and bullish for those construction-related stocks. The sector heat map is neutral to slightly bullish as well. We saw a little bit of selling last week in biotechs, large cap, small cap, and medical devices, as well as some health-related equipment names, while Europe and some of the international ETFs started to improve a little bit more last week, with more yellows and light oranges versus the red that we saw 3 weeks ago. Additionally, the consumer discretionary versus consumer staples ratio is bullish when this indicator continues higher, like it was back in 2018, looks more like that, and also the period after the rollover in 2018, the end of the year, reversing after Christmas and moving higher, where presently look very similar and bullish for equities. All of the 12 sectors that we follow and trade are moving higher, with the exception of real estate, which is setting up again, pulling back to the 21-day, the blue line, while most sectors are above the 21-day, with the 21-day and the 50-day moving higher. Possibility that industrials, financials, and energy continue their higher highs and higher lows. Watching energy for some strength on Monday and Tuesday. Financials, we're looking for the banks to follow through. And the industrials, which did very well last week. Watch the aerospace and defense stocks. Those also had a pullback to the 9 or the 21-day moving average, looking like they're going to move higher this week. We're looking for IBD 50 stocks that are above the 9 and 21-day moving average, perhaps have tested it recently and bouncing off of that area. We'd also like to see RSI above 50, and for MACD to have a recently turned or crossing over this week. ASML, while it does look good, consolidating, volume shows that institutions look like they've been selling. MACD is crossing, so we'll watch to see how this reacts at the 21-day this week. In addition to ABBV, we're looking for that to follow through and push above the 50-day, having been rejected on Friday. RSI is about to cross over. If it does to follow through, we could see an expansion day to get back above the 50-day and above these volume by price bands, which could give us the 52-week highs in the short term. Adobe is also trying to move back up to the top of this range. We need to see RSI move higher as a function of price. Volume did taper off on the recent consolidation, so that's a possibility if MACD does cross and volume picks up that we might see a follow-through in some of these software names. AMD, watching how it reacts to the 9 EMA on Monday and Tuesday. RSI is above 50, while MACD shows that we have some loss of momentum. Volume picked up on the sell side for AMD. Akamai looking for a follow-through as well. Push above the 21-day. RSI would turn back up as a function of price. Amazon continues to print higher lows. We're looking for a higher high this week. RSI is above 50. While we look for AMT, Applied Materials, to move above this volume by price area. Got rejected at the highs on Friday. RSI is above 50, but the volume is what caught my attention. MACD's back above its signal line, looking for a follow-through this week. While stocks from the industrial space and materials groups like Berry Plastics continue to consolidate, showing muscle, looks like a bicep in profile on RSI. Above volume by price, trading in an area where we are at 52-week highs, so there's no supply up here other than the people that have just recently traded. Volume has been significant. The flag or consolidation has come on lower volume, exactly what you want to see. Just keep an eye on MACD to start the week. That'll be a function of price, so if we start to break out or pull back a little bit, might be a better setup if you didn't take it 2 weeks ago when we first talked about BERY and added it to our review in the weekend video. Bristol Myers, along with Merck and a few other pharmaceutical names, watching this consolidation. The gap up on Tuesday went sideways. RSI is still fairly strong. Volume coming in on the gap up, looking for a follow-through. The consolidation is coming on lower volume, which is what you want to see. MACD is above its signal line, so we'll see how it handles this 64.85 pivot high on Monday, or if it comes back to the 9 EMA short term. Cadence Design continues along its bullish path. Every time it pulls back to the 9 and 21 day, buyers step up. We're looking for that to follow through on Monday, Tuesday. I would start off with a day trade or a scalp, looking for a push higher if the opening range sees price action breaking out, and then use the ABCD pattern during the day for a barometer. Make sure that it holds up above VWAP for starters after 10 o'clock. Chegg, I still think there's going to be some reason to buy this stock. We're watching how it handles the 9 and 21 day on Monday. RSI is trying to creep back above 50. Major volume by price support down below. I do want to see a follow-through. There's a possibility we could test the 50-day, which would be even better setup if buyers step up there. So either way, looking for buyers on Monday and Tuesday. As we mentioned with copper, the builders and construction-related names continue to look bullish. We're looking for D.R. Horton to continue its bullish trend. RSI starting to show muscle. Above the 9 EMA, looking for a follow-through this week. Dollar General, follow-through, breaking out finally after a several-month consolidation. It's trading in an area of no overhead supply, so there's literally no one up here to sell to you. As RSI remains above 50, volume starting to pick up and MACD is above its signal line. We're looking for a follow-through on DG. In addition, we have shares in Dollar Tree, which is showing the same action. Walmart looks like it wants to break out. Looking for a follow-through here as well, as Target remains the leader in the group. Having broken out back here in late July, this is what I'm looking for Walmart, Dollar General, and Dollar Tree to do this week and the following. Futu Holdings, looking for this pullback to the 21 day to hold. Very large volume by price support just below. Looking for it to bounce. If we see a bullish day Monday, a safer entry would be an additional bullish day on Tuesday. That said, you could always scale in. If it does attract buyers on Monday, we'll look for a follow-through. As RSI remains above 50 and would turn up as a function of price, while MACD has crossed over and volume increased. So just keep an eye on this one going into the week. Horizon Therapeutics, looking for follow-through on many of these biotech and pharma-related names like Merck and Bristol Myers Squibb. As we look for the entire group to move together, gives you a better edge. IIPR, Innovative Industrial Properties. This one buys and leases out climate-controlled warehouses for the medical cannabis group and soon, I guess, for the residential use of cannabis. Growing facilities continue along their bullish trend, broke out in late July, continues its bullish path. CLAC, looking for all of these semiconductors to move together. It would be great to see NVIDIA, Intel, and Advanced Micro all moving together along with Lam Research, among others, in order to look for follow-through and CLAC. Kirkland Lake and the other stocks in the gold miners group, Franco-Nevada, those are all breaking down a little bit. Watch how it handles the 21-day on Monday if you have any shares in this particular setup. Kroger, looking for a follow-through. I know Mikey is looking at this one and have been trading it as well. Lam Research, as previously stated, like to see this break out of this range, along with the other technology, software, and semiconductor stocks in this group. Microsoft holding the 9 and 21 day. Really like to see a follow through. Got some nice upside. It's in the middle of this range, looking for a breakout to the upside, which would affect RSI, of course, and that would move higher and stay above 50. Looking for MACD to turn back up and for volume to increase. Netflix started off the week pulling back at the 21-day and the 50-day, looking for a push back above the 21-day now. RSI rise back above 50, while we look for NVIDIA to perhaps lead this week, with the semiconductors following through like Lam Research and CLAC, along with AMD and Intel. As we can see with NVIDIA, volume definitely showing institutions a bit picking up shares. MACD's above its signal line, and RSI is near 70. Sprouts Farmers Markets, very interested in this name in addition to Kroger. Love to see it back above the 9 and 21 day. If the bulls can manage a maybe expansion day on Monday, Tuesday, we could see a follow-through and for RSI to move back above 50 as a criteria for a long swing setup. MACD will turn as a function of price. We're starting to see volume pick up, but it's not above average yet. Look for a push above the 9, 21, and 50 day this week. Thermo Fisher has been consolidating for the last 3 or 4 weeks. After this nice bullish run, it's still bullish. We're watching RSI. A breakout could see new 52-week highs in the short term. With the same with Tractor Supply, different industry group, but same kind of consolidation after a very nice bullish trend into 52-week highs. Looking for a work day to continue higher, push above the 50-day, maybe an expansion day, which would take us back to the 52-week highs most likely, with employers and hiring picking up. This human resources software related name should see a follow through over the next few weeks. That said, it is below the 50-day, so it really has to prove itself on Monday and Tuesday. A move above the 50-day on Monday would be a bullish sign. A safer entry would be a second bullish day on Tuesday for entry if you're thinking about swing trading it short term for a week or two on a transition back to the 52-week highs. Zoom looks like a short, smells like a short, but every time you try to short this one, I've tried twice, and both times managed to get out with a small profit over the last month or so. 2 times, both times, the stock reversed and moved higher. So there's still a lot of buyers out there. Keep an eye on Zoom. Love to see which way it's going to go this week. In addition, we'd like to see some of these stocks in the list on the opening monologue move higher. Relative strength line climbing with the markets in a correction. Obviously, we're not in a correction, but what it does find is stocks that are showing relative strength. I've listed those in the opening monologue, so look at these top 10 at a minimum. In addition to the stocks showing above average volume, those are listed in green in the opening monologue. Again, look at the top 10. For potential setups, many of these look pretty good. I've listed the standouts. In addition to the stocks that are listed in cyan, which is from the blue dot scan, I look at those top top 5, top 10, but I'm very interested in the ones that fired a blue dot scan trigger most recently. You can see the 14th, the 13th, down through the list. Most of these look really good. I'm following through. Like INOD, that one I saw had a nice look to it. Looks like it's going to break out. A very inexpensive name. Maybe you buy 100 shares, so 200 shares of it. If it continues higher, it's possible that it breaks out and moves higher. Over time, you can see where it's been before. Maybe it's 600, maybe $6 on this one in the longer term. With Evoke standing out in this group, looking for a follow through. Nice little bullish pattern, breaking out. Develops drugs to treat gastrointestinal disorders and diseases. EVOK. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. It is August the 16th, 2020. Look for a watch list out later tonight around 11, 12 o'clock, midnight on the East Coast, 8:30, 9 o'clock on the West Coast. I hope this helps. Take care, and we'll talk to you soon.